Apiam Animal Health, listed on the Australian Stock Exchange as AHX, is a progressive animal health services company with a large pipeline of acquisitions. And joining me right now is Dr. Chris Richards. Good welcome.
Thank you. It's great to be here.
Now, before we talk about the accelerated growth strategy and the short-term aspirations of $300 million in turnover, let's quickly recap on the financial year 2022 results.
Yeah, well, this year, FY22, we posted a record revenue of $157.2 million, which was up 24.6% on FY21. Our gross profit continued to expand. It was up 37%, and our underlying EBITDA was up 20% to $18.3 million, with our operating cash flow over 100% for the second consecutive year. So, these are pretty strong results, which give us an exit FY22 pro forma revenue of about $180 million. So it keeps us on target for the $300 million by FY24.
So this has very much been driven by an accelerated growth strategy, and people may be aware of that. Could you outline just quickly why this accelerated growth strategy that's feeding into this increase in revenue?
Yeah, well, there's been significant opportunities that have arisen as a result of the pandemic. So during the pandemic, there was between 15 and 20% increase in pet ownership. That occurred not just in the cities, but in the rural and regional areas as well. And with that, because of the cost of those animals, has become a higher expectation on the level of services that are provided. So, we've had increased pets. We've also had increase in regional migration and peri-urban growth, people moving from the cities into the regional areas. And that's really contributing to some really good opportunities. The vet industry itself, the market dynamics is really changed as well during that period. So those clinics have grown rapidly. And there's also some challenges in the industry with labour shortages. And so, we're seeing several veterinary clinics, looking to join a corporate model to address these industry challenges and help them with their growth opportunities.
Well, it seems very much like you've been aggregating these services, but not just in the pet sector, if I can say it like that, but also in the equine, which is a more professional industry in terms of livestock and cattle. So, what's the mix of business there between the domestic business and the more upmarket, upstream in the equine and bovine?
Yeah, well, so we were separated out based on what we consider our dairy and mixed clinics, which are clinics which are doing mixed animals. So, for example, cattle and sheep and horses, as well as companion animals, and that on a pro forma basis makes up about 74% of our business now, with the balance being our consultancy services into pig and feedlot industry. If we look at companion animal alone, that's really heading towards 50% of our overall business.
Wow! And so, in the short term, are you going to continue with acquisitions in this area?
Yeah, we are. We'll continue along the same rate as which we did in FY22. So we're aiming to add about $35 to $40 million in revenue each year with acquisitions. Of course, these acquisitions are high quality acquisitions, and this year on the clinics that we acquired in FY22, we actually delivered a 7.8% increase in revenue over our projections for the year. So it's not just acquiring clinics, but we're also getting some really good growth synergies out of these clinics. So we'll continue to make acquisitions. We're also building new clinics. We're expecting to build between 3 and 5 new greenfield clinics this year. Expecting them to fall into Q2 and into the second half.
So in terms of competitor analysis, and I'm not saying domestically, but internationally, how do you rate your organisation rate against your peers?
Oh, I mean, I think we're really operating at an exceptional level compared to our peers. And particularly, we sort of see ourselves as being operating and having services and support programs, very much along at the same level of a lot of the larger corporate groups globally. So, we think we're performing very well. We've got a very low turnover when it comes to vets. We're very good at recruiting vets to the business. and as well as developing new services and rolling these out across the business. And it's these new services where we're really getting year-on-year growth.
Now let's talk about looking ahead for FY23. What have you got in store for the company and for investors?
Yeah, well, we'll continue on our organic growth programs. So, we've rolled out programs such as Pro Dairy into the dairy industry, which we had 64% growth this year. Our Best Mates program, which is a wellness program for companion animals, had near on 25% growth. So continue on our organic growth with our service programs. We brought 3 new vaccines to market over the last 12 months, so we'll continue on those. We'll also continue on our value recognition program, and this is where we're charging more appropriately for many of the services and procedures that the vet industry historically has used as loss leaders. So really valuing our people and charging appropriately for the contribution that they're making to the health and welfare of animals. So yeah, organically, that's what we'll be doing. We'll also continue on our acquisition strategy, develop the greenfields, as I mentioned, and this is all about increasing shareholder value.
Absolutely. Very exciting business that you're operating. Dr. Chris Richards, who's the Managing Director of Apiam Animal Health Limited on the Australian Stock Exchange as AHX. Go look them up now. Sir, thank you very much for joining us today.
All right, thank you.